9K, 63.1K, the 302 to the 886. Wave B has to be a three-wave structure. We're then looking for a 5-3-5 zigzag in this particular scenario. Invalidation is the high, preferably B is finishing after the 302 fib time taken from the start to the end of A, which is the 19th of May. I have opened a good one. So the reason I think this one is very interesting from a psychology point of view is because of a triple top. Now, by all means, I think in general it's interesting to take the lows here at least one more time, which happens with this particular scenario as you're looking for an A, B, and then a wave C to take the low. The reason I prefer price to first move up a little bit further, ideally, is because of the mindset of the market. So the moment this low was made and price moved up impulsively, you immediately saw a sentiment switch in the market, people getting very bullish, right? And looking for all-time high and 100K next and 500 and whatever, you know. However, with this scenario, we get another push to the upside, preferably on high volume in a wave C, to create a zigzag. A triple top. What happens here? People get greedy, FOMO, gonna buy, looking for all-time highs, 100K next, I'm gonna miss the boat, blah, 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 blah. But this is then where your absorption is taking place of market longs, and we move towards the downside, creating a triple top on the chart, getting a wave C to the downside, which preferably is high volume. Wave C should be an impulse to the downside as well. As mentioned, preferably then ending on a high amount of volume because it creates fear, creates panic, creates people talking about 15K, creates people talking about the bull market is finished, right? When price is over here, everyone talks about 1 million and whatnot. When price is here, people are going to be talking about, oh, the trend is finished and, you know, whatever. It's the emotion. It's the typical emotional roller coaster you see in the market. Don't follow crypto Twitter. It's going to hurt your brain, right? Follow yourself. Stick to the chart. Stick to the information the price is giving you. But from a psychology point of view, this is an incredibly interesting scenario. It doesn't really necessarily make this scenario more or less valid. It's just that psychology-wise, it's very interesting, right? It has to match the Elliott wave rules, which it does. So in this scenario, preferably, we see another move towards the upside, and then over here, look for resistance. We do have some additional resistance in that area. So we have the blue box here, just above the golden pocket, 68.2, 69.2, and then around the 886, 786, 70.7 to 72K, right? Very, very interesting indeed. Your very simply most bullish scenario is your low is in and you look for an impulse up. 1, 2, 3, 4, 5. Pretty boring because of course you just expect continuation to the upside and that's it. What is interesting is this structure, looking for a wave 3, is exactly the same as this, but then you're looking for a wave C. So the price action between the most bullish scenario, continuation to the upside in wave 3, is similar to a zigzag to the upside in a wave A, B, C. But then you're looking for a wave B. So in both of these bullish scenarios, we're preferably looking for price to move up at least one more time. But from a psychology perspective, I would prefer this over continuation to the upside. Side note, by the way, we have a weekly gap on the weekly time frame. This is your gap over here, all right? Weekly order block, price moved up, and the low of the next candle. This creates a gap. Very often, the first time you hit it, a gap is respected, and you see a bounce. The moment you come back here again, it does increase probabilities to fill this gap. Now, one time frame lower on the daily, we have closed a candle inside the gap. We had some additional support resistance for the ones that remember over here on the 4-hour chart, which got nicely respected as well. But it does increase probabilities to fill this gap sooner or later. Of course, we have to first see local weakness, but filling this gap could happen as well with the ABC, which is interesting. Now, with regards to support to the downside, if you do take the low over here at 56K, then the pretty much next area is 54.4, by the way. There's a daily naked point of control there. But with regards to the blue box, 51.6, 51.9, and then we have 49.1, 49.7, and then we go to the mid 45s, right? So, or the mid 40s, that is. More local support 59.4, 60K, 57.9, 58.3. More local resistance, by the way, 63.4, 64K. Very interesting indeed. Okay, zooming in once again. So we're going from the daily, weekly, daily, down to the T, down to the local structures. This move to the upside here counts best as an impulsive structure, which means this can either be a wave A, a wave 1, or in the bearish scenario, a wave C. If this is a wave C, and I'll highlight this in a second with regards to the daily bearish scenario, if this is a wave C, it has to be part of a flat structure or a zigzag. But in a zigzag, we need a wave A, B, C, which clearly is not the case because we don't have this price action, which means the only option to count this bearish as a wave C is a flat. And then an A, B, C. But this wave C did not take the high of your wave A in an expanding flat, which means this is now a running flat. Wave C not taking the high of A, running flat, very rare, never preferred unless all of the other structures fail, which means pretty much you got to take the low. That is when all the other structures are failing. So the probabilities are higher naturally that this is an A or 1, just because this wave C would have to be part of a running flat, which is very rare. It's the least common or rarest flat pattern. Most common is an expanding flat, right? A, B, and then C ending above. Then you have a regular flat, A, B, C, still C ending above A, and then you have the running flat, right? So something to keep in mind as well. So if we look at the highest probability scenario, right, as long as invalidation isn't hit, we're looking for a continuation to the upside on the 4-hour chart. You have an A or 1 looking for 2B and then a move up in a C or a 3. Here, in this particular case, we're not yet finished. I don't know sometimes in how much detail you want me to talk, guys, but of course there's a scenario where we're already finished. But in this scenario here, we don't yet have a finished B or 2. So we want to see another low and continuation to the upside. Golden pocket to the 786 is your common target area for a wave 2 from the low to the high of 1, 59.9, 58.4. What is interesting here is that this low, right, reversed to the upside just before hitting the golden pocket. And it is very rare to see price move to the downside, get close to the golden pocket, but not touch it. All right, so it is something that's playing on my mind. And to be honest, I find it very annoying that it not only happened at the low. If you take a fib from the high to the low here, the same thing happened at the high. Like, holy moly, we missed out on hitting the golden pocket again by a few dollars. So it's almost like pissing me off, you know. So it's something that we definitely keep in mind, because it is common for a wave 2 to end between the 05786, that's your common target area, and the 05 is hit. It's just that we got so close to the golden pocket. Why not hit the golden pocket? You know what I mean? And also we have a 2-hour gap. So on the 2-hour chart, same as on the weekly, but now lower time frame, we have a 2-hour gap here. Closed many candles inside, which has increased the probabilities to fill the gap, which would mean touching the golden pocket. So something that we definitely keep in mind. The 886 is common for wave B as well, rare for a wave 2. So the moment you hit the 886 and we get a move to the upside, probabilities are higher. It is a wave C. In other words, probabilities are higher for an ABC and a move to the downside afterwards. Okay. Inside wave B or 2, we need to look for a 3-wave corrective structure. A or 1 is an impulse, 5-wave move, right? 1, 2, 3, 4, 5. B or 2, a 3-wave corrective structure to the downside. We are here then looking for a complex structure to the downside, which is labeled a WXY. We could have a double zigzag here, WXY, or still a double combo, and I will show you a picture of a flotty in a second. Now, first of all, a double zigzag. Put a fib on the chart because this one is important. Sorry, I'm still not fully used to the mouse. there's like this scroller, you know, and then if I scroll quickly, it just goes. It's the what is it, Logi MX Master 3 that I got from my wife, because it doesn't, like, she can't plug in a USB in her new MacBook. Lol. So I got the mouse, which is very nice for the time at least. So, and it's a great mouse, by the way, can recommend. I actually think the new MX Master is coming out later this year. Anyway, analysis. So with a WXY double zigzag to the downside, we are looking for an ABC in W, preferably a zigzag in a wave X, which is most common, and then another ABC to the downside in a wave Y. The moment price hits the 0.7 before taking the low, the probabilities for a double zigzag to the downside will significantly go down. All right, so the 0.7 here is sitting at 63.9K. Price moving up and hitting this level, low probabilities for a double zigzag. In general, preferably this is already your high of X and your X is finished, and you look for a wave Y to the downside in a zigzag, wave A, B, and then a wave C. Common target area on the chart here, 0.618 to the 1.236, 60.1K, 56.8K. Alternatively, this WXY, so in other words, we're looking for this low to be taken. Highest probability, at least on the 4 hour. A scenario that Flotty mentioned this morning, and is something that I had on my chart as well, is a sideways double combo. A zigzag in W, a zigzag in X, and then a flat in a wave Y. Something we keep in mind. Taking the high of X once more, hitting the golden pocket up here and the resistance, move impulsively to the downside to hit the support and also hit the golden pocket at the low. And someone else, I think it was Symbios, if I say that correctly, in Bitcoin TA earlier today, also showed a scenario which would lead to exactly this. So if I quickly go to, oh yeah, here, Sidiums, sorry, Sidiums. So Sidiums, based on something that I wrote in the silver membership about the two golden pockets not being hit. Symbios actually wrote this in chat as well, where, you know, or it's a fractal from May apparently. So price moving to the downside, hitting the golden pocket at the low, move up, hit the golden pocket at the high, and then move down to the support levels, right, the lower support levels, which is interesting. But in general, we're looking for price to move down, either in a zigzag wave Y or a flat, two highest probabilities. Your most bullish scenario is 2 or B being in, and this then has to be an impulsive structure to the upside. Now this is where things become a bit more clear, in case you got a little bit confused. I think sometimes I may have to show a bit less scenarios, you know what I mean? But I love to explain. So if this is the low of your 2 or B and you're finished with the corrective structure, we need to count one of 3 structures over here. If we can't count these 3 with at least a good amount of probabilities are higher, this is a corrective structure and we're taking this low one more time. So let's have a look. An impulse to the upside should be a 5-wave structure. 1, 2, 3, 4, 5. No overlap between a wave 1 and a wave 4 is allowed. We have our wave 1, our wave 2. 3, where's 4, 5? Wave 4 hit the 0.618, taken from the low to the high of wave 3. Invalidating a wave 4, significantly reducing probabilities for this impulsive structure to the upside. Inside this wave 3, by the way, we count a wave 1, 2, 3, 4, 5. We wanted to see another 4, 5. We didn't get another 4, 5. Then we have a diagonal. In a diagonal, we're then counting 1, 2, 3, 4, 5. But as you can see, this becomes an expanding structure. Expanding diagonal is very rare, never preferred. unless all of the other structures fail, meaning diagonal low probabilities. And that then leaves us with a double 1-2. And a double 1-2 is a wave 1 diagonal, wave 2 perfectly fine, zigzag, and then another 1-2, and we look for continuation to the upside. Now your second leg to the upside here, your second wave 1, is longer in price than your first wave 1. Trend-based subextension from the low to the high to the low. This is your first wave 1, this is your first wave 2. 1-to-1 is passed. However, in a double or even triple 1-2, preferably your second wave 1 is shorter in time and price. It's not a rule, it's a guideline. It's something that happens very commonly, right? So preferably in a double 1-2 or triple 1-2, you have your 1-2, 1-2, 1-2 up, where each wave 1 and 2 is becoming a little bit shorter in time and price. This wave 1 is bigger in price, this wave 2 is bigger in price as well. So it's not great probabilities. Let me actually check. We may have hit the 886 as well, by the way. And we also touched the 886. And the fact that we touched the 886 significantly reduces the probabilities that this is a wave 2. Because in a double 1-2, 1-2, right, the 886, very rare for a wave 2. Common for a wave B or a wave X. Increasing the probabilities, any move to the upside is corrective, not impulsive. Which in other words increases the probabilities to sooner or later still take this low. And that then means we're going to be looking for two scenarios to take this low. And those were the scenarios I highlighted with the WXY. A zigzag to the downside or a flat to the downside. And we'll wait and see what price wants to do, no? Also, small inter thingy here. There we go. Of course, have to manage at the same time. So, yeah. Hopefully that is very nice and clear. Okay, the most bearish scenario is that we continue towards the downside. So instead of taking 65, we're going to take 56. WXY. And this is a bearish scenario that, of course, eventually is still bullish. Most bearish scenarios, of course, continuation. But as long as we are not down here, it doesn't really matter. I can talk about it, but it won't add any value. So we first need to see price moving towards the downside. So here we have our WXY. It's a sideways double combo, regular flat in W, running flat in X. As mentioned, I spoke about it. This then has to be a wave C, creating a running flat structure, which is very rare, never preferred unless all the other stuff fails, which happens, right? It's not that it has zero probabilities, but from an Elliott wave perspective and Elliott wave probabilities, a running flat is simply a very rare structure. So that taken into account, it's not the highest probability. But here we then move to the downside in a wave Y. Common target area for your wave Y on the chart in yellow, 56.7, 47.8K, trend-based extension from the start to the end of W to the end of wave X. That of course means that locally we are then looking for price to move impulsively to the downside, where we have our wave 1 or A, WXY in a 2 or a wave B. Now let me go to the 1 hour time frame because this is important. 2 or B hit 0.5, taken from the high to the low of 1 or A, which is a common target for a 2 or B. That's not a problem. The issue I have with this structure at the moment is the subdegree count of 2B, which is in white. So because of this move to the upside, we have to count this as a 3-wave structure. A, B, C. A zigzag here to the upside is then counted as a wave Y. We cannot finish A or 1 down here because A or 1 has to be an impulsive structure, and this move is very high for an impulse, right? 1, 2, 3, 4, 5 overlap between 1 and 4. So we can't use a normal impulse unless we talk about some sort of a diagonal, but you can see it's an expanding diagonal, which is rare, never preferred unless all of the other stuff fails. So it works much better to finish A or 1 somewhere here on the left, somewhere there on the left. Now, because wave Y is counted as zigzag, wave W cannot be a zigzag. It has to be a flat. Wave W in a sideways combo structure can only, so not a sharp is a double zigzag, but in a sideways corrective structure, where your wave X retraces more than the 07, wave Y and W can't both be zigzags. So wave W has to be a flat, can only be a flat or a zigzag. But the only way to make wave W a flat is to end wave A or 1 here, to then create that ABC flat structure moving below the low here. But this gets us into trouble with 1 or A, because that has to be a 5-wave structure. 1, 2, 3, 4 works perfectly fine so far, but your wave 5 to the downside, 1, 2, 3, 4, 5. Damn. Preferably we finish 1 or A here and not there. So ending 1 or A here, where is our wave 4? Right? 1, 2, 3, and then what? Where's our 4 and 5? It's not great. It's not great with regards to the probabilities of counting this WX and then a wave Y, where X also has to be a flat in an ABC with a very extended wave C, by the way, which is also not common. So it lowers the probabilities for this scenario, right, compared to the more bullish scenarios that I've already spoken about. Alternatively, this is an expanding diagonal, and then you have a zigzag in 2B, and you want to see a price move down in C or 3, which is, it is yet to be seen. Because in general, let me now talk about probabilities. Right? Probabilities on a daily time frame. So this is where pretty much I'm summarizing what I've spoken about. It's a lot of info, but hopefully people learn a thing or two at the same time. Probabilities from an Elliott wave point of view are higher that this structure to the upside is an A or a 1 instead of a C, because if this is a wave C in the bearish scenario, it's a running flat, and a running flat is rare, never preferred unless all the other stuff fails, which therefore means that on a daily time frame, the probabilities are higher. We're going to at least see another move towards the upside, taking 65K before potentially later 56K. This then leads us to the two scenarios shown at the beginning, the diagonal, where we are going to be looking for a wave B, or continuation impulsively, 1, 2, 3. We don't have to know what happened, like what scenario then is more likely at the moment, because in both cases, you simply expect a move to the upside, and this move to the upside will give us the information that we need. All right, so currently, that is the highest probability, price moving to the upside at least once more. However, on a 4-hour time frame, based on what we have seen here and the low probability of bullish scenarios coming off this low, the probabilities are higher that your low for B or 2 is not yet in. And we're looking for either a zigzag down or a flat in a W, X, Y structure, a sideways combination to the downside. The moment, if that, it's all probabilities. Now, the moment price does move towards the downside, and we're going to hit some of these levels down here and some of the support areas, we have to wait for proof of support. And that is because there's always that bearish scenario in the back of our minds. It's not the highest probability, but it never has zero probabilities. There's no certainties in trading. So the moment, right, price is ranging here. If it comes down, we want to see price holding these levels and then move up. Your absolute final level, what CGMs showed as well, is this here. This is the point of control of this little bit of price action. But if price comes down, proof of support, show prices to show us it wants to hold here, and we're going to look for price to move up. It is the highest probability, but we just want to be a little bit more safe and see what price does locally. Market structure change, bullish CVD divergences, whatever you're looking for, that gives you the confidence. Right? So highest probability on the daily, a move up. Highest probability on the 4 hour. Still looking for this low to be taken sooner or later, either in a zigzag or a flat structure, where you first take the high, hit the golden pocket, hit the resistance, and then move to the downside to look for price at support. And then we want to see some proof of support and take it from there. On the 15-minute time frame, of course, we had some news just now, leading to a very big wick over here, which is, of course, quite interesting. I gotta, like, please, I should almost put a box here, because this is very ugly on the Coinbase chart here, right? This is not visible on most other charts. I think on none, maybe no other chart. But this structure so far to the downside counts quite correctively in a way. There's a lot of overlap here in the beginning, and yes, we have a quick move down and sideways again and a quick move down. It doesn't really look that impulsive yet. So arguably that flat might have a higher probability than the zigzag to the downside. Yeah, that's nitpicking. So by all means, the probabilities have been communicated, and we wait for price to show us what it wants to do. So would be good to hit the golden pockets. We do have bullish CVD divergences, by the way. So higher low in price, lower low on the CVD. Target would be this high locally. So pop up, zoom out. So yeah. Now that Flotty is here, there he is, was about time. Let me show this. So always in the morning, I first do my own analysis, and then I always check Discord. And I love the fact that Flotty is very active with his counting as well. So Flotty was like, "Yo, Koen, what do you think about this, right? What do you think about what you see here?" So he had WXY, where he had a flat ABC in wave Y. What you see on the chart was my trading plan as well. He just copied my chart and wrote his stuff on top of it. So short here, long here, short at the box. This is now in play, and then potentially, if we see signs of strength, as mentioned, potentially a long. But so he was like WXY. Of course, my W and my X, my W would be here. My X is at the same place, right? So that's fine. And then in Y, we have that potential ABC in a flat. So yeah, I absolutely agree with the thought of Flotty there. So yeah, very nice, very nice. I like that that Flotty is also a full-time trader with Elliott Waves. There's a handful in the group, as far as I know. So it's good to see. It's good to see. Okay, started at 15 minutes, and there you go, everyone. Yeah. I mean, if I have to make a choice locally, so daily probabilities for our probability is quite clear. If I have to, without analyzing this area in detail with FIP pools and everything, you can kind of see the amount of overlap we have, right? While price is grinding to the downside, especially in the beginning. So I would say the probabilities are higher for it to be a corrective structure, which would increase some probabilities for that potential flat in Y, which would be an incredibly interesting scenario as well. Because wave C, wave Cs tend to be quick structures in flat scenarios. So if you do get a wave C to the downside in a flat for an A, B, and then a wave C, if that wave C is very fast, very quick, high volume, and you're going to move to lower levels, it creates panic, creates fear. We like that. Okay. Opa, voila. Which scenario, Matthias? The one that is working on a B before a C up. The one where it is working on a B for a C up. Oh, wait. You mean on the 4-hour time frame? You mean this? I think this one. Yeah, probabilities for this are higher than your wave 2 or B already finished, or price taking the low at the moment. And that is that's just because this move up has a higher probability of being a wave A or 1 instead of a wave C. Because if this is a wave C, it can only be a wave C with a flat, but then you have a running flat, and a running flat is rare. So it's never preferred unless other structures fail. But they haven't failed, because pretty much your failure would be price taking the low. So and of course by that time we know, like, if price takes the low, then okay, cool, and we got clarity. But as long as we don't, the highest probability is this. And because locally here, right? Because locally we can't count a nice impulse up. A diagonal becomes expanding, which is rare for the bullish case, right? Or a double 1-2 has a second wave 1 that is longer than the first. The second wave 2 is longer than the first in price and time. And we hit the 886 for a second wave 2 is also low probability. Increasing the probabilities, everything here is corrective. Increasing probabilities to take this low. Increasing probabilities for 2 or B to not yet be finished. So you know what I mean? It just adds up. But that's how you want to think. So of course the structures locally here impact the probabilities of the higher time frames. That's why I really like enjoying low time frame or counting low time frame stuff. So yeah. So probabilities for this would be high, yeah. Cheers, Matthias. Yeah. Let me go to the 1 hour, because there's so much noise on the lower time frame here. Hey, since when is a pinned comment white? YouTube, always innovating. Are we looking for... Wait. Try it once more, mate. Are we looking for a short or a long? Depends on your plan and strategy. I'll talk to you about the 6 steps that you have to follow to build a plan or a strategy very soon, because it will benefit you. Because what you are looking for is your own personal choice. Other people might look for longs while you're looking for shorts. Other people might try to look for longs on a 4-hour time frame while you're looking for shorts on a 1-minute time frame, because you're a scalper and there are like more swing traders. So it very much depends on your plan and your strategy, but I'll talk about that in a second. We were here. Suhail, welcome. Rostam as well. Open your chart. Already did that. Yeah, cheers, Sarah. I took the same short with CD. Thanks for learning. Always a pleasure offline. Good to see. Good to see. I like it. I like to see people learning more. Also, CVD, it's a great tool. It's a great tool. Thanks, Mark. What's up? Good morning, Adam. How are you doing? Is it a new feature saying that you can add text at fib levels? Add text at fib levels? No, I don't think so. No. No, you can just use prices. Yeah. Haven't seen that one yet. Dutch Vips. Yeah, so the probabilities, of course, have been communicated. What's up, Ways of the Jedi? How are you doing? Bottom feed is doing their things. Leave my wife out of this, Jedi. Oh boy. From LA, Rob. Good to have you here. Welcome, welcome. Fell out of bed again. Everyone is looking for the same trade. Yeah. So, but it is interesting to, sooner or later, like probability wise, it's high to hit it. You know, it's quite rare for it to get so close, but then leave it hanging. But also, if this is the low and this is an impulse up, or one of three impulse structures, all three of them don't have high probabilities. So visiting the lower golden pocket would be nice. First touching the upper one to create a bit more bullish sentiment might be interesting with the flat. In that case, of course, we have the bullish CVD, so these might then also play out. Thomas Tribula, welcome. Errol, good to have you here. By the way, Stupa, good to have you here, of course, as well. Destin Innovation, increased probable market is elite ways as well. It's interesting to spot it when that happens, though. How come bearish CVDs play out way more than bullish ones? Both ways. So bullish and bearish CVDs both play out, but it depends if you're, of course, at support or resistance. Here, the bullish CVDs played out. We had bullish CVDs here, bigger bullish CVDs as well, and these played out with price moving up. Yeah, exactly. That would be interesting. That's also what I like to look for, Liquid Mafia, is eventually create another low. At least that's what I would like. We have to wait and see what Elliott waves give us, but I would like to create a bit more fear, right? Get the greed out of the market. Isn't expand to take all-time high, go down in 5 to fill the monthly gap to 52k. Jillik, it is a possibility where instead of the zigzag you move above all-time high, but it's not the highest probability as long as you're not at least close to getting to the all-time high. So it would be a bit early. So what Jillik is talking about is this. Right, so and then you have your pocket for an expanding flat where the common target is the 1.236 to the 1.38. For an expanding flat. And then you go down in C. Now, so the common target for a wave B is all the way up here, and because an expanding flat is most common. And a wave B has to be a three-wave structure. Now, if this is your A, B, C, and most commonly wave B in a flat is a zigzag, by the way. So if we internally look for an ABC, let's do this first, right? Because that is most common. You can already start to see now that your wave C to the upside has to be very long. This is your common target area for your C, most common. The 1.618 is still okay, but you can see it's quite far away from your common target area of a wave B. So that reduces the probabilities for a flat just because your wave C has to extend so far to increase probabilities for a flat on this time frame. So therefore it works better to look for a three-wave ABC for the wave B before taking all-time high reverse, creating a triple top. Of course, a fake out above all-time high and then bring it down would be very interesting. But at the moment, it's not yet highest probabilities. You know, we definitely need to wait for more info in that case. We covered that one. Buenadia. Yeah, Powell is talking about 33 minutes. Cheers, Waste of the Jedi and Cheese. Good to have you here once again. Don't spam me. He will catch up to chat. Yeah. Thanks, Adam. What are your favorite indicators for trading alongside Elliott waves? CVD. I have a video on my chart. I have a video on my chart. I don't even know if that works, if you can have a video on your chart. But if you go to my YouTube channel, scroll down, CVD for beginners, this one here. And this explains everything about CVD. And then in Discord, I have a channel that is called Good to Know. Here's a one-pager about CVD, including a link to the video. the link to the website, which is AGGR, it's a great place by the way, and the template. So yeah, it's all there. When I hover my mouse over a fib level, it says add text. I can't find it in the fib settings either. That would be something new. Okay, let's see. I hover over it. Nothing happens. Add text? Wait, I don't know. Maybe let me refresh. Would be quite interesting. I don't really think it's on my chart. Or they you know. Beep. Nope. It's a Jeroen special. I can't. I can't. I've sent a picture in the lounge. The added text feature in TradingView. Interesting. Oh. That's an interesting one. Add text. I have no idea. So yeah, it's not a text box. That's a new one. I don't have that same option on my chart. Interesting. What's up, Christian? I don't really know. Like, so I wouldn't use that extra bit of text on the fib, but I can imagine maybe some people like it. Bitcoin just hit liquidity grab at 60K. Yeah, moved into this range, right? Structural support. Don't we have to have volume to reach the all-time high? We are not seeing the flow cap. Of course, yeah. I mean, in general, if you want to take all-time high, continuation to the upside with a volume would, of course, be good to see. But in corrective structures, and that's what I would like, if you do go for that ABC up and not take all-time high, but do go up in volume, and up in volume does not mean like record volume, by the way. So go back to the daily. So as you can see, so far, this is a typical range sideways. People call it a bull flag, I suppose, and volume moving down, right? Now, what I can imagine people like to do is they like let's say traders that just started or traders that are trendline traders, they'll probably have something like this on the chart, or maybe they do this as well. Because they look for simple patterns. So or maybe I don't know, maybe they did this as well, but you know what I mean. So this trend line has now been broken, and then we move up and we backtest the trend line, and then we expect continuation, and then if we break this trend line and all-time highs next. So so for me, what I think is very interesting is to break this trend line, right? And break the trend line with a wave 3, retest with a wave 4, move up in a wave 5, take the high, act like it is a retest, and then move down. Interesting, no? That's what I would like to see. But it's a legit scenario from an Elliott wave point of view, but we just don't have that information just yet. Because in B, you're then looking for a zigzag in an A, B, and then a wave C to the upside, and your wave C needs to be an impulse. 1, 2, 3, break the trend line, 4, backtest trend line, 5 to the upside, hit the resistance. TradingView, please. Uh-oh. Am I still live or are we out? Trading View doesn't want to. My AGR is still working, by the way. It's just that my Trading View is out. I'm here. Oh, yeah. Nice. Yo, Trading View. Okay, 1 second here. Close the page. Close the page. They are watching me. Trading View has been unstable for me in the last few days too. Yeah, for me too, man. Like same. Like I had that the live stream I did 2 days ago. Trading View was buggy. So it was sometimes just like going black and then back to screen again in a second. So yeah, not too great, but anyway, it doesn't matter. Here, what I wanted to do is hopefully it works now. Oh my god, man! I can't open my target boxes. It's not even that big of a folder. Like, come on, Trading View. My targets are crashing Trading View. That's an interesting one. Anyway, doesn't matter. I have a target. Luckily, I know all this stuff out of my mind. Literally, just during the analysis, I actually showed all the targets on the live stream as well. So it's interesting that I can't seem to open the folder now. But we do have. Man, my target boxes are so influential, no one is allowed to see it anymore. So we do have resistance here between the 786 and 886. Right, we have a target box. So we have a box here just around the golden pocket and another box above. So it would be nice for your wave C in an A, B, C, and B to then 1, 2, 3, 4 retest trend line, 5 hit upper resistance and then move down. So you create the fake out effect of moving above the trend line, retest, move up, break the high again. What are people doing? Longing, right? That's one of the first things you'll probably learn in trading, like patterns, trend lines, and then seeing that would be very interesting. Holy moly! Took me a while to actually explain that. Have there been any shorts on Bitcoin that you could not find account for? So far, no. I never had that problem. So what I do sometimes do myself is, of course, with Elliott waves, not always are structures very clear. As in, you don't yet fully know how to integrate that certain piece of price action. In that case, it's better to zoom out instead of zooming in. It's a mistake I did in the past. Is you try, maybe on a 4-hour or daily time frame, you're like, okay, what is this? I can't count it. And then you go to the 4-hour time frame, and then the 1 hour, and then the 50-minute, and then the 5, and then the 1 minute, and you're trying to figure it out. Instead, it works best to zoom out, wait for some new information, and then it becomes clear. So you have to wait a little bit. It doesn't happen too often, but can happen. Also, what I like to do is once new information comes in, I very often remove previous detailed structures. So pretty much at the moment, because of this move up, I don't need all of this in my analysis. It's just that I like to explain to people what this move to the upside could mean. But this I can now only use this. I could focus my analysis only on this picture here, and the probabilities would be the same. Just because we know this is an impulsive structure to the upside, highest probability, A, 1 or C. For a wave C, this has to be a flat. So, okay, I need to use this bit, but we know running flat is rare. So higher probability, we're looking for an A, B, C or 1, 2, 3, which means I can pretty much focus on, okay, what is happening here on the lower time frames. And you see me do that very often. I like very clean charts. I don't like a lot of stuff on my chart. You have people that keep their counts on the chart on the, like 15 minutes and all that stuff, and it creates for me a very messy chart. Even though the counts are old and we are now here, keeping all of this on the chart, I always remove it. I remove all the details. So, which I mean, pretty much you can already see locally. With the bullish count, I just have a wave 1 or A here. I don't show the sub-degree count here anymore because it doesn't matter. It doesn't matter where your wave 1, 2, 3, 4, and 5 is. It's just that based on the info that we got afterwards, highest probability is an A or 1 here in the bullish count. You know, so I remove the sub-degree. Same with the move down here as well, by the way. You know, I don't have the 15-minute count here, only counting. Let's see if I can open my targets now. Yeah, okay, there we go. Nice, okay. You're sadistic. Yeah. Cheers, Samuel. No, I'll drink on that. Do we have a triangle in the making? I guess you're talking about local price action. Oh my. AGGR is working. The ticker is working. Price is moving. Trading view? I don't know. Oh, it's going to be an interesting stream. I shouldn't change too much on trading view, I guess. Let's just answer questions while trading view is doing whatever. A triangle. Now, with regards to a triangle here, you need to look for this to be a wave A, B, C, D. In that case, your wave C is not yet finished. You're still looking for D. I only start to look for triangles after a wave D is in. Before a wave D, there's probabilities, higher probabilities for other structures. So this would be your wave A. This would be your B, right? Can happen. You can have an ABC down here and an ABC up. So that's your A, B, and then you look for C, D, E. But I would still wait for a D minimum. Yeah. Nuke it. Click a fib line to make it active, then move cursor over to add text and do a double click on it. Now you can enter text. Interesting. Click then move cursor over to add text. I had no idea. Trading view innovating, but at the same time they're bugging. I don't know, like they're updating stuff, but yo, it's not great. Let me just reopen again. Hoppa. And then when I hover over the fib, it says add text. I have to click on it. Yeah. Well, I clicked on it, but it didn't say, so I don't know. Maybe they're currently updating my trading view window. I have no idea. What a weird situation to be in here. They're watching you, I know, right? Trading view not work on the live stream, never preferred. Exactly. What the hell? Cheers, MS. How do you move the fibs horizontally with the mouse without changing it? Hottentotten. 10 press shift and then so click on the fib, press shift and then move it sideways. So it's the shift function. Thanks, Errol. What Errol says. They're still like, what's up, maybe a band-aid? How you doing? I actually have a video on my YouTube account which is all about cleaning up your chart. It's called How to Avoid Analysis Paralysis. It's already a year old. Look at my beautiful thumbnail that I got from Google. So basically what I show in this video is how to clean up your chart and avoid analysis paralysis at the same time, because you don't have a line everywhere on the chart. So yeah. Cheers, Adam. Cheers. Bitstamp price still not hitting the 886. Okay. Yeah, on my chart it did here at the low. So, yeah. A little bit of price action. Let's see. We have 17 minutes left, and then we might get some more volatility. Maybe. Ismail, by the way, welcome. Good to have you here once again. It's been a while. It's been a while since I've seen a message of you back in the live stream. Good to have you here. Paralysis by overnotice issue, agent. Yo, maybe a band-aid. Go to the gold playlist, like in Discord. Go to gold, right? Playlists, educational playlist, or the Elliott Wave Theory playlist, and then the target box video. Hopefully, that will help you with overanalysis and your paralysis. Of course, there's a public video, but in that video in gold, I take a bit more time and talk in more detail about things. So hopefully that one will help. Because in the past, when I started, I was learning all the different tools in TradingView, so I was using everything, and yeah. And you start using trend lines and channels and fibs and speed fans and volume profile and time frame horizontals and naked point of controls and support resistance levels and whatever, right? Like there's so much shit on the chart. It's so saturated with lines that I was like, what am I gonna do, right? What am I going to trade? Now, of course, the condensed areas are stronger, but I had a line everywhere. So eventually, that is where what I call target boxes came from, which is the blue boxes that you see on the chart, or white once they're hit, which are very well respected, because those are my now condensed areas of support resistance based on the tools that I like to use. So a lot of the tools that I used to use are out the window. I don't use them anymore, right? I rarely ever check them. So VWAP, order flow, speed fan, channels. I don't really use channels. Like lots of stuff that I tried and I explored in the past. Step 1 of the 6 steps, everyone, is stuff that I eventually removed from my analysis because for me it's not relevant anymore. And that then brings me to the six steps that, in order to create your personal trading plan and your strategy, and even a clean chart, the 6 steps to have a high probability of becoming consistently profitable really help. And step 1 is exploring and trying as many free tools as you can. Build experience, and that is probably the phase where you are going to have lines everywhere on the chart, because you're just testing everything, right? You're testing the channels and the volume profile and the speed fan and the Fibonacci and different levels of Fibonacci and trend lines and whatever. But that is an important phase because you build experience with all the different tools. But then in step 2, that is where you're going to minimize. Less is more is step 2. After you build experience with tools in step 1, step 2 is find your favorite tools and build statistics on these tools. And then you remove the rest. You're going to focus, right? You go from a lot of different tools and a lot of experience. You're going to zoom in to only the tools that you actually like to use. And you're going to build data on these tools. And then step 3 is you combine some of these favorite tools into now a strategy. So step 1 is try as many as you can. Step 2 is build statistics on some of your favorite tools, like individual statistics per tool. And then step 3 is you combine some of these favorite tools. So you might, again, reduce the amount of tools, combine some of them and build more data and see how it works. What's the win rate, risk to reward ratio, Step 4 is tweaking and adjusting, like add a tool, remove a tool, see what it does. And then step 5 is actually starting to trade it. But now you have condensed your experience to such a specific set of tools that very likely you're going to have very clean charts because you know exactly what you're looking for. You know the tools you like to use, you know what you have to wait for, you know the rules of your strategy, you have the data, and that is what will really help with your trading because you have clarity. You don't have to enter YouTube chats anymore, for the people that sometimes do, and ask, are we long or short, right? Because I immediately know if you ask that question, clearly you don't have a plan, right? It's obvious. But by going through these steps, you build a plan for yourself and you know exactly what you're looking for. And then step 5 is you trade it, work on trading psychology, and step 6 is upping your budget. So these steps, it's not only creating a plan and a strategy, it's also avoiding people to overanalyze, analysis paralysis. It helps with emotions. Going through these 6 steps helps with your emotions, because collecting data will help you with your emotions as well. Because if you know that your combination of tools has, by data, right, based on data, has a win rate of 50% with a 1, 2, 3 RR, and you have about 3 setups a week, like 12 in a month. I mean, you're like, just follow the plan, right? You're like, if you know, okay, based on 100 of back tested and forward tested setups, this is my RR, this is my win rate, this is my most profitable day, this is my best target, 1, 2, 3 in this example. You just follow the plan, right? You just take the trade. Whenever the opportunity comes, you just take it. So it will help with your emotions as well, because you're simply going to trade data instead of, I think price goes up or down. You have a statistical backup. I know based on my data that I should take this trade, and I don't care if it is a loser or a winner, because I know based on 100 trades that I'm going to take, I will have about this amount, right? 50% win rate, 1, 2, 3 RR. I will have around 50 wins. I will also have 50 losses. I don't care if this trade, according to my plan, is a win or a loss, because I know that in the bigger picture, I'll have 50 wins, 50 losses. And if I have a win, it's a 1, 2, 3. And if I loss, if it's a 1% loss, right? So the data will also help you with your emotions. You're just gonna trade data. And that is what really helped me in my trading. Elliott waves is a bit different. Elliott waves is probabilities, it's knowing invalidations, and it's a lot more, I mean, trading Elliott waves, it's a different setup every time. But with my other strategy that I have developed following these 6 steps in about 2 years, 1.5 years, 2 years, I'm already using that for a very long time now. I mean, that one is purely based on data. Whenever there's a setup, trade the setup. Yeah. And I can have 5 losses in a row. I can have 10 wins in a row as well. Yeah, it's part of the job. It's part of the thing. Average win rate about 60%. 1, 2, 3 RR, and not too many setups in a month. But that's okay. It works for me because I like to do a lot of other stuff. Arguably, I trade more Elliott waves than I do with my statistical strategy. But both